Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. Happy Friday to you. First, let's look at the headlines. Boris Johnson has a tough task on hand as he tries to get the British Parliament to approve his new Brexit deal tomorrow, with the Democratic Unionist Party opposing the deal. A group of secretaries will meet today here in India to consider bringing down the government's stake below 51% in at least 8 public sector companies. That's a BloombergQuint exclusive. Domestic air traffic or air passenger traffic grows only 1% in September, according to data from the Directorate General of Civil Aviation. Zee Entertainment's second quarter net profit misses analyst estimates as it provides for loans extended to related parties. Cash flows have fallen and receivables have risen. And Reliance Industries will be the only Nifty company set to report its second quarter earnings today. All right, so it's likely to be a busy end to the week. Let's take a look at the action from Wall Street before we get started on the other stuff. The early cheer of a draft Brexit deal that came in just around 3 o'clock yesterday, or just before that, evaporated by closing time in the US. Yet the S&P 500 and the Dow Jones ended less than 1% away from their all-time closing highs. Ranita Young of Bloomberg News sums up Thursday's trading session in this report.
U.S. markets climbed toward all-time highs on Thursday as the S&P 500 flirted with that 3,000 level, and the Dow Jones Industrial Average saw its major drag from IBM, which reported disappointing earnings. Morgan Stanley also reported earnings, but it was much better than expected, and in fact, it was the latest major U.S. bank to defy those claims of slowing global growth. BB&T also reported third quarter adjusted earnings per share that were better than expected, and aftermarket will be E-Trade Financial. Friday will be Coca-Cola and Schlumberger. Meanwhile, Treasury yields rose during the session, and oil continued to ease as U.S. stockpiles continued to swell, and gold climbed and ended just a little bit over unchanged. And that's a look at your Wall Street action on Thursday. In New York, I'm Ranita Young for Bloomberg News.
All right, let's also take a look at the Asia-Pacific region and the markets therein. Rosalind Chin is joining us live from the studios in Hong Kong. Good morning, Rosalind. How are we looking at the end of the week?
Generally, markets are trading not too badly, actually, holding on to some positivity here. The MSCI Asia Pacific Index making gains of 0.16%. Overall, though, they are basically eyeing a 3-month high. But of course, there is always a caveat to that. So, trade optimism has been driving the markets higher of late. But we are waiting for some data from China that could change the sentiment a little bit, and that is the GDP for the third quarter, which is going to be coming out within the next 20 minutes to half hour or so. So retail sales numbers are also coming out. Now, we did have the Foreign Ministry spokesman Gao Feng speaking a short while ago, saying that both sides, the US and China, are closely working together on the text of that phase 1 trade deal that we've been talking about. He reiterated China's aim to end the trade war. Now, some are reading into that a little bit and saying that, well, those remarks and the surprise injection of cash on Wednesday could indicate that these numbers on the GDP are not going to be that great, and it could indicate that growth may have deteriorated further. They're reading a little bit into that, but we shall have to see. Very soon those numbers will be coming out, so we will know for sure. Here in Hong Kong, the Hang Seng Index is making gains of about just over 1/5 of 1%. Right now, the Shanghai Composite making gains as well, came out of the gate in positive territory, up by about 1/3 of 1%, and the CSI 300 also up by more than 1/3 of 1% right now. Over in Japan, the Nikkei 225 up by 1/2 of 1%. The Topix making gains of more than 1/4 of 1%. We had CPI numbers for September showing signs of weakening inflation. Not a big surprise there. Consumer prices rising at the slowest clip in more than 2 years in the month of September. And speaking of data, we also have some third quarter GDP for Korea. That is out next week, so we'll be keeping an eye out for that. Right now, the Kospi making gains of more than 1/3 of 1%. Finally, in Australia, the S&P ASX 200, that is dipping into, well, more than dipping. It's actually pulling into negative territory, down by 0.67%. We had the RBA's Governor, Philip Lowe, saying earlier that low rates are working, he says. The economy is gradually improving, and we could see a return to trend growth over the next year or so. He says that negative rates also are extraordinarily unlikely in Australia, but S&P ASX 200 shares are not faring much better on those comments. Finally, a quick look at Aramco, because we did have some headlines out basically saying that they're going to be delaying, said to be delaying the IPO by at least a few weeks. There was supposed to be a green light given on Thursday. The Saudi government was meant to be meeting to give that green light on Thursday, but so far it looks like actually the IPO will be delayed. We're told that they want time for bank analysts to incorporate the third quarter results into their pre-IPO assessment. So quick look at oil there, Brent up, at 59.62, so that is losing, and also the WTI crude futures at 53.85 a barrel. Back to you.
We have a deal.
This deal represents a very good deal both for the EU and for the UK.
This is a fair, a balanced agreement.
Deal is always better than no deal.
We have delivered, and we have delivered together.
I think everybody should be convinced that the deal is the best.
That the Irish Prime Minister is content with this is also a very important sign for me.
It's up to the members of the House of Commons now to decide whether they want a deal.
This is your Prime Minister to deliver now a vote at your Parliament.
I hope very much now, speaking of elected representatives, that my fellow MPs in Westminster do now come together to get Brexit done.
Well, that's a question. Boris Johnson may have managed to ink a deal with the European Union, but he faces a tough battle back home. His new Brexit deal will be put to vote tomorrow at a time when his Irish allies, the Democratic Unionist Party, has already said that they don't support the deal. Anna Edwards of Bloomberg News, who was in Brussels covering the negotiations, reports.
Boris Johnson here in Brussels has managed to get agreement with the EU27 on a Brexit deal. But remember, we've been here before. Theresa May 3 times put her Brexit deal to Parliament, and 3 times it was rejected. So he's done this part of the Brexit process. He's managed to get an agreement. It differs from Theresa May's deal in some important areas. It differs around Northern Ireland, and in some ways that the DUP, the party in Northern Ireland that props up his government, in some ways that they don't like. So this plan from Boris Johnson is not going to have the support of the DUP, which is important, and more on that in just a moment. It also differs from Theresa May's deal because the future relationship that's been negotiated here is a more distant one, a less connected one with the EU than was envisaged by Theresa May and her government. So now we get to the bit that happens at the weekend where this deal will go to Parliament, and so over the next hours and days we're going to be counting the votes on either side. Will Boris Johnson manage to make it to the magic number? 650 MPs sit in the House of Commons, but 320 is the magic number for him to get to. If he manages to secure the support of 320 MPs, then he's able to get his deal over the line, and Brexit is still possible by the 31st of October. Without the DUP support, though, that could be difficult. Every single vote will matter, and he'll be working hard to try and maintain both sides of his Conservative Party and to win votes also from other parties. Anna Edwards, Bloomberg News, Brussels.
All right, let's turn to other news now. The world's largest IPO offering has been further delayed. Aramco has decided to postpone its primary offering by a few weeks, according to sources that have spoken to Bloomberg News. James Thornhill reports on the reasons behind the delay.
I think there were some doubts in the investment community about how Aramco was going to reach that $2 trillion valuation. And as you say, the spin that's been put on it, at least background reports, are that they want to incorporate results from the third quarter. Now, that quarter was very volatile for oil prices because, of course, we had that the drone strikes on Aramco's facilities in Saudi Arabia. Now, while that took out a large amount of production, so obviously would have hit revenue in that sense, we also saw a very large spike in prices. So it's pretty unclear what the impact was on Aramco's bottom line. And I guess they're taking the view they want to give investors some clarity on how they actually did perform in 3Q. So at the moment, that's all we've got to go on.
Now, these turn of events a headache for the banks who are on the deal. But for the company, what about the bigger challenges here that they're facing?
Yeah, sure. Well, it's been an incredibly volatile period in the oil market. So, we've obviously had quite heightened tensions in the Middle East between Iran and Saudi Arabia, and the US also involved. With various flashpoints through the year, and that's generally been positive for prices because people worry about the threat to supply lines. But offsetting that, of course, we have the US-China trade war ongoing throughout this year and the ups and downs involved with that. So it's been a very hard market to trade with those global demand worries as sort of offsetting the potential threat to supply. And in that backdrop, it's hard for investors to really put an accurate valuation on Aramco, and it possibly plays into the reason why there's been some delay here.
All right, let's have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with Britain and the EU. They say they've finally secured a deal and there is no need for further delay to Brexit. Last-minute talks in Brussels produced agreement on key issues, including Northern Ireland's status and the need for customs checks in the Irish Sea rather than on the Irish border. However, Boris Johnson still needs to win UK parliamentary backing, and his crucial Northern Irish allies have already said they will not support the agreement.
I do think that this deal represents a very good deal both for the EU and for the UK, and it's a reasonable, fair outcome and reflects the large amount of work that's been undertaken by both sides.
This is a fair, a balanced agreement. It is testament to our commitment to finding solutions. It provides certainty where Brexit creates uncertainty. It protects the rights of our citizens, and it protects peace and stability on the island of Ireland.
The lira rallied to a one-week high, meanwhile, on news of a temporary ceasefire in Syria. Turkey agreed to halt military action in the border area for 120 hours to allow Kurdish forces to withdraw. The news was announced by U.S. Vice President Mike Pence after hastily arranged talks in Ankara. He also said the U.S. would remove sanctions on Turkey if the ceasefire remains in place. And China says its trade team is staying in close contact with U.S. negotiators. This as they work on the text of a draft deal that could be signed at the APEC summit next month. Now, the Ministry of Commerce says China's aim is to end the trade war and to remove all tariffs. However, Beijing has indicated it wants more talks before it will be ready to sign an agreement. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the trade setup for the day here in India. Agam Vakil is here to set you up for the day's trade and also what's happening in the futures and options space. Agam, there's only one Nifty company that's going to come up today. It's after market hours? Or is it going to come up during market hours?
Yes, we do have Reliance Industries, which will come post-market.
Yeah, so
it's the biggest earnings that we're keeping an eye on because it's not one company, but maybe a handful of companies roll into one. So, of course, Reliance Industries is going to be very important, and of course, is going to have a bearing on the index as well, considering it has a significant weightage on the index. But for now, we're keeping an eye on the SGX Nifty, which is actually indicating a decline. We saw a lot of strength in the Nifty yesterday. It also set 5 straight days of gains, and there is a lot of strength. And who'd know that we'd almost be back at 11,600 after just a few weeks ago. We were at 10,700. So, there you have it. That's where we are right now. And, we've seen a lot of strength come in the mid-cap and small-cap indices, along with a lot of strength in the banking indices too. But let's move on and talk about your ADRs and Tata Motors, of course, on the back of the fact that the UK has reached a deal with the EU on Brexit. Tata Motors is up nearly 8%. Of course, not everything has been closed when it comes to the Brexit issue, but for now there is a lot of exuberance as far as stocks which have significant exposure to the United Kingdom are concerned. But FI numbers continue to be encouraging. Foreign institutional investors are continuing to put in money, this time to the tune of 11,060 odd crores on a net basis. basis DI is selling to the tune of 512 odd crores. Let's move on, talk about, well, your fund flows, and you have Reliance Industries, HDFC and SBI along with IndusInd Bank largely leading the gains. And if you consider the weakness in the technology stocks, there wasn't as much. Now let's move on and talk about futures and options and see how things are panning out there, because we are seeing some very interesting moves. 1.5% decline as far as your Nifty futures is concerned. So short covering there, and fresh longs in the Nifty banking futures. Can we expect fresh longs to come into the Nifty today? Let's wait and watch. But in terms of your levels based on options right now and its positioning, until yesterday we were talking about 11,000, and now we're talking about 11,400 as a base, and that's always a positive. Of course, on the higher end we have 12,000, which seems resumes activity, and of course we have a lot more writing around 11,400 and 500 puts. But let's move on and talk about the WIX. Unexpected lines falling to around below a mark of 16, and the Nifty put call ratio as well is at 1.4, significantly higher, the highest that we've seen in a few days now. And as far as stocks go, PVR, Castrol India, NIT Tech, Container Corp. We don't have as much in terms of advances, but a lot of accumulation in open interest in terms of stocks which are looking in decline in OI. Hexaware, Torrent Pharma, and Zee. Zee is going to be a very interesting stock to watch today, other than Reliance, of course, because of its earnings. And even though the earnings may not have had such a damn picture, it's the the variables that are coming out of the balance sheet which are a little more problematic, it seems. So, Alex, we're going to keep an eye on Zee, possibly one of those stocks which may very well have a very large move today.
Absolutely. Thanks so much for that, Agam. And as Agam mentioned, watch out for Reliance Industries over the course of the day ahead of its results at the end of post-market hours today. Reliance Industries, of course, is expected to report the highest profit growth in almost 4 years. And some of the profit boost is owing to corporate tax cuts. Somit Sarkar is here to tell you what the street is pricing in. Somit, over to you. Morning.
Good morning, Alex. If you see on a standalone basis for the second quarter of financial year 2020 compared to last quarter, the revenues of the company are expected to be flat. The EBITDA is expected to be higher by nearly 9%, and this will be for the first time in the last 5 quarters that the company would report an EBITDA growth. Margins are expected to come in at around 17%, while the net profit growth of 7% is expected to be highest in the last 15 quarters for Reliance Industries on a standalone basis. Now, the gross refining margin, that is the key number, is expected to be higher by nearly 17% to close to $9.5 per barrel. Now, this is on the back of strength seen in the benchmark, that is the Singapore gross refining margin, which averaged around $6.5 per barrel versus $3.5 per barrel in the last quarter. However, Reliance Industries premium to the Singapore gross refining margin, that is expected to come down at close to $3 per barrel, which was the lowest in the last 17 quarters. Now, the improved refining business, that is the sharp recovery that we are expecting in the refining margins, coupled with lower ethane and LNG prices and higher petrochemical volumes, would partly offset the weakness that we have been seeing in the refining throughput volumes, and because of the weakness seen in the petrochemical margins. Now, the petrochemical margins are expected to be lower because of reduced product spreads. Along with that, if you see the refining EBIT is expected to be higher because of strength seen in the Singapore gross refining margin, while the throughput number is expected to be lower, that is the volume number is expected to be lower owing to the shutdown at the Jamnagar refinery. Petrochemical volumes, however, is expected to be higher compared to last quarter, because last quarter we had seen a shutdown of the petchem plant. That's the reason the Q-on-Q, the growth is expected to be higher. On the consolidated basis, if you see, the retail business is expected to see some growth slowdown because of seasonal weakness, while the overall net profit of the company is expected to be higher because of the lower tax benefit. Now, key things to watch out for from Reliance Industries earning would be GRM outlook, and if the management gives ahead of the IMO regulation that comes in. Along with that, the petrochemical margins that the company reports in this quarter and the outlook, and any future capital expenditure guidance that the company gives would be key thing to watch out for from Reliance Industries earning today.
All right, Somit, but we're also talking about Reliance Jio, and the lower tax rates will benefit that company as well. But what else is expected from the telecom arm?
From the telecom arm, if you see, the revenues are expected to be higher by nearly 6%, EBITDA is expected to be higher by 7%, margins are expected to come in flat at close to 40%, while the net profit is expected to see a jump of nearly 27%. Now, the average revenue per user is expected to further decline to 121 rupees in the second quarter of financial year 2020. Now, this revenue and EBITDA growth is aided by the strong subscriber addition that is expected to come in. Now, analysts are expecting the subscriber base for Reliance Jio to be close to 35.5 crore. That is a net addition of close to 2.4 crore subscribers in the second quarter, which will be aiding the revenue and the EBITDA growth for the company, while the ARPUs are expected to decline because of more JioPhone subscribers coming in the subscriber base, and they come at lower rental, and because of which there would be some ARPU dilution. And along with this, the cashback that the company has been given on the digital recharges will also dilute the ARPU further at 121 rupees. The net profit is expected to jump 27%, mainly on the back of lower tax rates that have been applicable now. And from the Jio broadband business, the Gigafiber, analysts are not expecting any meaningful contributions in the second quarter of financial year 2020. Now, the key things to watch out for from Reliance Jio earnings will be update on JioPhone subscribers, any commentary of tariff changes, signs of declining capital expenditure intensity, increase in cost structure due to commercial rollout of Gigafiber, and management commentary on and any other management commentary on Gigafiber rollout would be important to watch out for from Reliance Jio earnings today.
Hey, thanks so much for that, Somit. Let's stick with earnings. Zee Entertainment's profit number in its second quarter missed analyst estimates after the company incurred an exceptional loss of 171 crore rupees. Forum Bhatt gets the top highlights of Zee's Q2 results in this report.
Net profit was clearly a miss for the company, while there were certain other concerns which came into picture during the second quarter earnings. Let's take a look at some of the key numbers. Revenue increased by 7% to rupees 2122 crore. Net profit increased by 7% versus an estimate of 24%. This was on account of an exceptional loss of rupees 171 crore rupees, which was recognized pertaining to ICDs to related party. EBITDA increased by 5% and margins declined to 32%. Ad revenue growth remained subdued during the quarter, while there was a 19% increase in subscription revenue. Now, coming to certain other concerns, operating cash flows for the company turned negative to rupees 246 crore. What is to be noted is that the auditor highlighted that the operating cash flow statement was not reviewed by them. The second point which is to be considered is rupees 200 crore worth of fixed deposit. The company states that the bank adjusted these fixed deposit against dues from related parties. The company also faces a problem of increasing receivables while there is a delay in payment from Dish TV and City Cable. Now, coming to what management has to say on this, the management expects the receivables to come down during the fourth quarter of this fiscal. It also expects the operating cash flows to turn positive during the next year. The management states that the festive season is expected to spur growth for ad revenue going forward. So, on an overall level, the net profit were a miss for the company, while the concerns over fixed deposit and ICDs was what was to be noted. And going forward, the increasing receivables and debt is something which is to be looked for.
All right, so do have a look at that stock in trade today, like Aga mentioned, and of course, based on what Forum has just told you. But let's talk about a BloombergQuint exclusive now. A group of secretaries will be meeting today to consider bringing down the government's stake below 51% in at least 8 companies. The list will be placed before the cabinet once a decision has been taken. Nikunj Ori reports on this story.
The core group of secretaries on disinvestment, headed by Cabinet Secretary, is going to meet today to consider a proposal of lowering government stake in about 8 public sector companies below 51%. These 8 public sector companies are Engineers India Limited, Indian Oil Corporation, NTPC, Bharat Electronics Limited, BMEL, MOIL and GAIL India Limited. Out of these 8 public sector companies, the government holds the lowest stake in Engineers India and Indian Oil Corporation of about little over 51%, and the highest in Bharat Electronics Limited, where the government holds around 55%. post the CGD's approval, the final approval for this proposal will be given by the Cabinet Committee on Economic Affairs headed by the Prime Minister. This is a step towards a government step towards meeting its divestment target of a little over 1 lakh crore rupees for the current financial year, at a time when the government has announced a huge corporate tax reduction, and the tax revenues in the first half of the current financial year have been disappointing. Besides this, the government has also sought transaction advisors for a few public sector companies where the government intends to strategically disinvest its stake, and in some of the companies it intends to transfer management control. These companies are BPCL, Concor, NIPCO, THDC and Shipping Corporation of India. And if these transactions in which transaction advisors have been sought go through in this particular financial year, the government would well exceed its divestment target. Over to you.
All right, well, there you have it. If you want to read that story in more detail, it's available on the website BloombergQuint.com. For now, Somit Sarkar is joining me back to tell you all about the stocks and news. Somit, we've already spoken about a couple that are going to be in focus today. I believe that your list is quite long today.
Well, yes, the list is quite long on the back of earnings. Now, the couple of mid-cap IT companies that reported results yesterday, L&T Infotech, the results were in line with analyst estimates. The BFS vertical, which contributes nearly 27% to the revenues, showed weakness with flat growth compared to last quarter, while the other verticals reported a strong performance. Margins were better than expected despite a wage hike in this quarter, while the company also acquired nearly 100% stake in Power Cloud Technologies for a value estimated at close to $15 million. Cyient also reported numbers which were in line with analyst estimates. The DLM business and the turnaround in the company's service business aided the company's revenue. Margin growth was on the back of cost optimization, higher volumes and operational efficiencies, while the service and the communication verticals are yet to recover from client-specific issues for Cyient. Jai Bharat Maruti has reported a weak set of numbers. Revenues were down nearly 25%, net profit plunged 77%, while the EBITDA was down by nearly 38%. South Indian Bank reported a mixed set of numbers, and were up nearly 15%. Net profit was up nearly 20%. Asset quality was stable, but the provisions also increased to close to 306 crore rupees for the company. While DHFL reported its first quarter FY20 numbers yesterday, now the net interest income was down nearly 75%, while the company reported a net loss of close to 216 crore rupees in the first quarter of financial year 2020. Cipla would also remain in focus because the company has acquired novel and patent anti-infective product Ilores from Venus Remedies. Now the Cipla is looking to strengthen its presence in this branded Indian critical care space. Aviation stocks would remain in focus, that is Indigo and SpiceJet, because DGCA has put out the September passenger growth numbers. Now for the entire industry, if you see, the passenger growth stood at 1% for the month of September, while Indigo's air passenger growth was close to 13%, which was the slowest in the last 22 months, while for SpiceJet the passenger growth stood at 25%, slowest in the last 4 months. Indigo's market share increased to 48.2%, while that of SpiceJet declined to 14.7%. Now Bloomberg News said that the DGCA in a statement also said that for 2019 the air traffic growth is expected to be in the range of around 4 to 6%, while they're expecting a double-digit air traffic growth early next year. United Spirits would remain in focus because their peer Pernod Ricard Indian division showed weak growth in the first quarter. Macro slowdown and impact of floods in Maharashtra and Haryana impacted the financials of the company. The management also indicated growth moderation for India business in financial year 2020. Alicon Castalloy would also remain in focus because they have been awarded a multi-year contract aggregating at close to 810 crore rupees from various parties like JLR, Daimler and Samsung. Norcell because they have started trial runs towards manufacture of rubber chemical at company's plant in Dahej in Gujarat, and now in January last year the board had approved this capital expenditure of close to 255 crore rupees for expansion of capacity both in Navi Mumbai and Dahej.
Thanks so much for that, Somit. Now, it's a market holiday on Monday, not because the exchanges want to give you a long weekend, but because Maharashtra and Haryana go to the polls. While the Congress may put up a fight in Haryana, the grand old party is virtually absent in Maharashtra this time around. Nagpur man Devendra Fadnavis of the BJP is seeking a second term and may well be on his way to get it. BloombergQuint's Hormuz Fatakia sums up the key facts as voters in Maharashtra exercise their franchise on Monday.
Devendra Fadnavis is seeking a second term in office. The Shiv Sena has thrown its weight behind the BJP yet again, while the opposition fights to stay relevant. This is ground zero in Maharashtra before polling takes place on the 21st of October. The 9 crore electorate of India's third largest state by area and second largest by population will decide the fate of nearly 3,200 candidates on that day. This time, the action has shifted from Mumbai to other parts of the state, where several high-profile battles will take place. Now let's take a look at some of them, and starting with Nagpur, where Chief Minister Devendra Fadnavis has been an MLA since 1999. He now seeks a third term from Nagpur Southwest, a seat that has only voted for him in greater proportion compared to the previous terms. Up against him is Ashish Deshmukh of the Congress party, who until last year was an BJP MLA from Katol. Now they share quite a history too, when Fadnavis had defeated Ashish's father and former State Minister Ramesh Deshmukh from Nagpur West during the 2004 Assembly election. From Nagpur, we move to Mumbai, and perhaps the only seat which poll pundits will be eyeing from the city is Worli, and Aditya Thackeray became the first member from his family to seek electoral mandate. The Sena has also been actively projecting him as the chief minister in waiting. Now, Worli is also considered to be a safe seat for the Sena. The last 6 assembly polls since 1990 have had 5 winners from the Saffron party. Now challenging Junior Thackeray will be Suresh Mane, the former head of the law department at Mumbai University. Mane is the president of the Bahujan Republic Socialist Party, who has agreed to contest on an NCP symbol, with the opposition parties firmly backing him. Having said that, the MNS has decided that they will not field any candidate against Aditya Thackeray. From Worli, we move to Parli, where the battle of the Munde cousins is set to see a sequel. Pankaja Munde had managed to pip her cousin Dhananjay to the post in 2014 by 25,000 votes, even as her vote share fell to 49% from 57% in 2009. Just before the polls, Congress leader T.P. Munde dissolved the entire Tehsil unit and crossed over to the BJP in what comes as a boost to the state minister. Now on to some leaders from the opposition candidates, starting with former CM Ashok Chauhan. Now, after a humbling defeat in the Lok Sabha polls just 5 months earlier, Chauhan is testing waters from the Bhokar seat, represented currently by his wife. Chauhan had won this seat in 2009 with an 80% vote share. And after a scam-tainted stint in the Chief Minister's office, his wife managed to only garner 54% of the vote during her win in 2014. Up against him is Bapu Saheb Gorthekar, who crossed over to the BJP last month. He was the former Nanded district president of the NCP. Now, another former chief minister who's looking to retain his seat is Prithviraj Chauhan, who's contesting from Karat South. Now, Karat South is an interesting seat. It has voted only for the Congress party ever since the 1962 elections. Chauhan in 2014 had managed to win this seat by 16,000 votes. Now up against him is Atul Bhosle of the BJP. Bhosle is the great-grandson of Yashwant Mohite, who was also an MLA from this seat for 6 terms until 1980. Bhosle had also contested against Chauhan from this seat in 2014. And finally, we move to Baramati, where the people have voted for the Pawar family for 52 years and counting. And Ajit Pawar is seeking a 7th term from the seat that he has represented since 1991. Pawar has been under the scanner after his name surfaced in a bank scandal, prompting his resignation as an MLA just days before polling was announced. Now making Pawar's bid challenging is Dangar community leader Gopi Chand Padalkar, who jumped ship to the BJP from the Vanchit Bahujan Aghadi in September this year. He had unsuccessfully contested the Lok Sabha elections from Sangli in 2019. While these are just among the 12 out of the 3,200 candidates that are in the fray, there were some who have missed the bus. The BJP itself had to drop as many as 20 sitting MLAs to accommodate crossovers from other parties, while some were dropped on disciplinary grounds. Now, prominent among them were State Education Minister Vinod Tawade, who won from Borivali, 6-time Ghatkopar MLA Prakash Mehta, who was dropped after his name surfaced in a housing scandal, and senior leader Eknath Khadse. While Khadse was set to file his nomination as an independent candidate, the BJP turned the tables by deciding to field his daughter Rohini from the Mukta Nagar seat that he has represented since 1995. Now, another prominent name missing from this list was Mulund MLA Sardar Tara Singh. While the 82-year-old four-time MLA was not given a ticket owing to age, he lobbied hard for his son Ranjit Singh to get a ticket. Now that too was lost after his name appeared in the PMC Bank scandal. Now, speaking of the PMC Bank scandal, that is one of the key poll issues that may influence voters in the state. The handling of the case so far, along with the death of some account holders, has not painted a good image of the state government just days before polling. Account holders have even threatened to not vote if their grievances were not addressed. Another issue that has not kept the state government in good stead is RA. The government, the BMC and the Mumbai Metro Rail Corporation had to face the ire of the citizens after over 2,000 trees were felled just after the High Court refused a stay on cutting down trees. Citizens there have also threatened to boycott the polls. Some of the other issues that might weigh on voter sentiment is the one in Vidarbha, the impending farmer distress, the demand for statehood, and the issues of the sugar cooperatives in the Pune division that might also impact voters in that region. So who will be the lucky 288 who will head to Mantralaya? We will find out on the 24th of October. But before wishing you a happy Diwali, we wish you a happy voting.
Indeed. So do go out and vote. And meanwhile, do stay tuned to everything that we have to offer over the course of today on BloombergQuint. Thanks so much for watching.